Today's verse of the day. Proverbs chapter 3, verses 11 through 12. Don't reject the Lord's discipline, and don't be angry when he corrects you. The Lord corrects the one he loves, just as a father corrects a child he cares about. On this Father's Day, I want you guys to remember that the Lord is, as your father, cares about you and loves you in a way that might not show it in the most positive of ways at times, but he is doing the things necessary in your life for you to go through things in order for them to help you grow through it and then see the results that you want to see. So you gotta go in order to grow. You have to be willing to go through the losses, go through the upsets, go through the things and the moments in life that aren't the most pleasing and the most comfortable in order to grow through them and become the person or obtain the thing that you want to obtain. And God is going to be there for you each and every step of the way. With that being said, let's get to the charts. What's good, you guys? Welcome back to another episode of the Market Recap and the Stock Market Predictions. It's your boy CB checking back in. Without further ado, let's get right to it. Starting out with Monday on the QQQ chart, 5-minute time frame. We had an initial run up in the market, opening above our pre-market levels at 738. We were holding above that level where we then start to see a push higher going back above 740. From there, we reached all the way back up to 742, where we then saw a reversal come into the market. Once this reversal kicked in, I wanted to watch and see how the market responded to the reversal. Was it going to flip on the day and go all the way back down, or was it going to hold structure and continue back up? Surely enough, it held structure, continuing back higher. We were then able to see it reclaim this orb high here and push back above that level, then later on breaking above 742. However, I looked to take a position once we got this reclaim of the orb high here, and I looked to take a position on the retest of this structure move from the orb high formation looking to break and the continuation hold of the structure here. I used this candle low as a stop loss, entered into this candle here, and I was able to capture this move from down there to back up into our 742 level, where I look to take trims. Trimming out most of my position, I actually just took full profit once we hit our target, because that was just my initial target. Nothing crazy, I just wanted to capture a small move in the market, and so I was able to capture that move from 739.5 all the way back up to 742. From there, I took profit, but it did continue later in the day. It did end up breaking above 742, as you guys see. And then we pushed higher, going all the way back up to closer to 744, breaking above it actually, and then seeing a rejection of 744.75. From there, we pushed back down and then closing out the day in that range at about 743.9. So that was our session on Monday. I was overall happy with my execution. Like I said, just a small basic play to start the week. I was not too pressed about wanting to capture the biggest gains in the market on Monday. Just wanted to start out slow and, have a good start to the weekend. So that's what we did. So with that being said, let's move on to Tuesday and talk about what trades we took on Tuesday. All right, ladies and gents, here we have the Qs loaded back up on the Tuesday chart, 5-minute time frame. As you guys see, we had some very aggressive failure coming to the market overall on the day, but starting out here, you guys see we have a initial hold above our previous month high of 742. We tried to go below it, but we failed to go below it, going back above it. And then shortly after, we just started to trail a little bit higher and higher. But once we reached closer to about 744, we then started to see failure kick into the market. And once the failure kicked in, it started to show a little bit of aggression to the downside. Going into that 9 o'clock hourly candle, we did see a reversal on the entire move in the very small range of the orb. We saw a breakout below the orb low, causing it to sell even lower. So I was just looking for initially I was looking for, sales, but I did notice that we were retesting and approaching our previous levels of demand. The 735 level in particular was a level that piqued my interest, but not only that level, also the previous day I believe previous day orb low also was a level that piqued my interest. And so I did look to take a little bit of a reversal, just seeing how we had such aggression to the downside kick in. I did look to take a position here. Once this candle closed, I used that candle as a stop loss a little bit below there. And then I was targeting back into the trail, the downtrend structure, which was this EMA level here, this green line, as my take profit for calls. And so I did take some calls here using that level as a stop loss. I was able to capture a quick move to the upside, and then I sold my position. Then I took a sell position back to the downside. I did capture this move with a breakout below, then it trailed me out my position once it retested and went back higher. Granted, I could have held a little bit longer using this candle as a stop loss if it broke above the trend, but I just wanted to take profits and secure it back on the day. So that was our trades that we took on Tuesday, but it did continue selling off later in the day, going all the way back down, reaching back down to our 729 level, which is actually the gap level that we had happened going to Monday. So over the weekend, the market gapped up, and then Monday the market opened higher. And so that was a gap fill zone that we created in the market from Friday to Sunday, going into this week. So that was the level we closed at going into the closing session for Tuesday. Now let's move on to Wednesday and talk about what trades we took on Wednesday. All right, you guys, here we have the Wednesday chart loaded on the Qs, 5-minute time frame. So we had a very range bound day, simply due to the fact that it was FOMC meeting. The FOMC meeting was taking place later that day in the afternoon, and the new Fed chairman, Kevin Walsh, was giving his first federal chairman response to rate hikes and things of that nature. So given that, I knew that going into the day, and so I did take lighter size, lighter risk, and kept my trades in check. However, I did do a little bit of over trading, and I do take accountability for that as well. My idea did work out, but the market was just very choppy, and we were not able to see that particular play out the way we wanted to. But nonetheless, we did make money on the day. Initially, we just over traded and gave it back. So let's talk about the trade that we did end up taking. So as you guys see, as I mentioned, we were pretty range bound. Also, given the day that we had on Tuesday, having such a wide moving day, it was a given that we would see a lot more slower price action going into Wednesday, adding into FOMC being that day. So we were very range bound initially to start the day, going in between this orb high and orb low range. Then we started to see a little bit of a breakout below the orb low, and what we thought would see a continuation, I didn't think we would, given that we had FOMC day. We retested that gap fill zone, reclaiming the gap fill zone, and then once I saw that we retested and bounced off the gap fill zone, I looked to take calls, as I had a feeling that we were going to push back into the orb low range and reclaim the orb low, then push higher, going to retest the orb high. Sure enough, that's exactly what took place. So I did capture this move here on this candle, using this candle as a stop loss, targeting back into the EMAs and then taking profits once we hit the EMA target. But I wanted to get re-entered into this position. Honestly, I should have just held the initial entry and kept that stop loss in check, or use it as a break-even stop loss, and then capture this move to the upside. But that was not the case. I took profits at the position that I took profits, and it ran another $2 or $3. So that was very unfortunate, because after this, then that's whenever the over trading kicked in. As I noticed that we were pretty range bound, going back and forth between the orb high and the orb low. I was trying to trade the range, but I was just trading it at the wrong times. So I was entering a lot of times right here on this orb low, which is what caught me up, because it's very wide. That's where you see the most wicks and manipulation happening. And yeah, that's really where I went wrong. But I did end up entering into a short position on another account I had, where I used this red zone as a stop loss area. So I knew that we were holding below 734 for the remainder of the day. So I knew, okay, as long as we hold below that level, then we should see lower by the time the FOMC meeting happens. That did take place, but it only took place after wicking me out of my position. Wicking me out of my position, like literally to the T, wicking me out of my position and then going lower. And failing below that level. Oh, it wasn't there actually, it was up here. So this held the position. We were right there to failing it, but it held the position. And then once the meeting actually happened, it then wicked me out of my position. And then in one candle, hit up and down, hit me with a strong wind wave. And it was very unfortunate, but you know, these things happen on FOMC days. That's why on FOMC days, it's important to keep your risk in check and manage risk and be very risk off, and don't use a lot of size. I didn't have a lot of size in the position, so I wasn't hurt about the loss. I was more so upset that I lost the way I did, seeing that the play played out and worked out in my favor. But nonetheless, the market did end up selling off back below that gap fill zone, and then we ended up pushing below it and actually going to close below that zone at 722 at the end of Wednesday. So that was the session we had on Wednesday. Very choppy, manipulative, slow price action all the way up until FOMC, where we then see this very wide-ranging movement. Typical day on an FOMC day. So that's why it's just important to manage your risk. But nonetheless, let's talk about Thursday and the last trades we took going into the close of this week. And it was honestly a short week because of Juneteenth on Friday. So we'll talk about Thursday and then go into what we can expect to see take place in the market this next week. Hey, what's going on, y'all? I just want to say thank you all for watching. If you guys are new, make sure to leave a like, comment, and subscribe. Also, turn on the notification bell. And if you guys want to learn more about how to day trade, I have a free day trading course on my website at www.continuebelief.com. There you'll get all the information and resources needed to help you guys learn more on your journey to day trading. I hope you guys enjoyed this video. Let's get back to it. All right, you guys, here we have the Thursday chart loaded back on Q. So as you guys see, we reclaimed that gap fill zone going into the pre-market. We gapped up again, bouncing off that 722 level, closing out the day on Wednesday and reclaiming back into 735, opening the day at 737. We saw a reversal off of that level, failing back down to 732 very quickly. Then we had a very quick reversal bounce going back up, reclaiming 737, but then showing another rejection off that level once more. Very wide ranging moving day. I believe I took a position off of the retest of this trend here. I noticed that we were holding above it. We had a little wick out of it, but I felt that was the only fake out that we would see. And I did look to take a position here off of this candle low. Using this candle low as a stop loss, I was able to capture a little bit of a move up, but then I was trailed out of it quickly after seeing it wick back below my EMA and my target. That little box zone was just my range of risk that I had for this position. I wanted to see it just go, and it did not just go. It failed shortly after that anyway, and so I knew that was the right idea to have. But yeah, that was really it for Thursday. It was pretty much a one and done trade. By then, we were pretty much done for the day and for the week because, as I said, Juneteenth was on Friday, so the market was closed on Friday. But what can we expect to see take place in the market this next week? Let's talk about it on the 4-hour chart for SPY. All right, ladies and gents, and here we have the SPY chart loaded up on the 4-hour time frame. So what a week. A gap up in the market that was pretty unprecedented, and that gap up happened because Trump announced that US and Iran were coming to an agreement and signing a deal this week, which they did do on Wednesday, I believe. On the FOMC meeting, they signed the deal that day, and then they also finalized the deal, started the peace talk for the next 60 days on Friday. So we had initial gap up on Monday because of that news, and then as we led up to the FOMC meeting, the Fed mentioned rate hikes going into 2027. So there could be possible rate hikes coming throughout the rest of the half of this year and then going into 2027. The market wasn't expecting rate hikes, they were expecting rate cuts. And so with the rate hikes being added to the possibility of outcomes that can happen in the market, that's what triggered the reversal move and the reclaim of the gap fill that we had come in on Wednesday. And so essentially that was the market pricing in the move because, or pricing in the possibility of a rate hike happening, because shortly after that on Thursday, we see the reversal and the reclaim of those levels happen very quickly. So it seems that the market is like, oh, well, wow, we're gonna have possible rate hikes on Wednesday, and then going into Thursday morning, they're like, okay, cool, we know that there's possible rate hikes happening, we good, we can keep running. So what can we expect to see take place going into this next week of June? what are our levels to watch? Seeing that we reclaimed 744, it's only right to say that 744 is going to be our level of demand going into this week. That's going to be our pivotal point. If we can hold above 744, we can see a retest of 748. Now, if we reclaim 748, we can get a push higher going back into 752.5. And if we push back above 752.5, then we have room to run all the way back up to about 757 or 758. Those would be the ranges to the upside that I see us hitting if we can hold above 744. However, if we cannot hold above 744, I believe that we can see lower. Our first level of demand below 744 would be around 737.5 to 740. That would be the zone of demand. I would say would be the next level we test to see if we hold. If we fail to hold that level, we can see back lower going all the way down to about 732. 740, 735 might be a quick pit stop, and then we push lower. I don't think it's a strong level, but I do think that it's something that we can see a pit stop, a little bounce off of, and then a continuation down lower to 732. So those will be the levels to the upside and to the downside that I think you guys should watch going into this next week. Leave a comment below. Let me know what you guys are watching this week. Are you guys bullish or are you guys bearish? Given all the news and everything that's happening in the economy, I think we're in a very, very aggressive buy the hype and buy the rumor, sell the news environment. And so meaning, okay, it's possible that these things can happen. So we're going to buy up the rumor, and then whenever the actual thing happens, we're going to sell into the news whenever the said thing happens. So that could be a possibility that we see a little bit of a failure below 744, given that the finalization of the deal is finally taking place, because we've been promised this peace deal happening and the conclusion of the war happening for the last 2 months. So we could see a negative response, given that we have been anticipating this peace treaty taking place for over 2 months. That could be a possibility that takes place, or it could wait till other news comes out that is more detrimental to the market and makes the market react in a more negative, fearful way. So, like I said, as long as we hold above 744, I think that we're in a good spot. We can push higher and possibly even break highs going into this week, just depending upon the momentum and the demand for stocks. So yeah, those are my thoughts. And with that being said, this will conclude this episode of the stock market recap and market predictions. Thank you all for tuning in once again. If you guys are new, make sure to leave a like, comment, and subscribe. Turn that notification bell for more content. Make sure to tune in tomorrow for our Rich Off Gains podcast at 7 p.m. It's your boy CB checking back in with you all. Thank you all for tuning in. I appreciate you all for watching. I'll see you guys next time.